interested in launching this kind of
Good morning, everyone. Thank you very much for taking the time to join us today. Today, we are going to talk about the blue economy. What is the blue economy? And more importantly, what can asset managers, as well as private banks and banks, generally speaking, do in order to help drive more funds and more investments in this specific field? So in today's session, we're going to start by talking about what the blue economy is exactly, and then we're going to move on to what is already in place in terms of frameworks and in terms of guidelines. With that regard, we are first going to hear from Derek, from the Prince Albert Monaco Foundation, following by Jessica from the United Nations. I will now hand over to Damien, our head of sustainable and impact investing at Barclays, in order to give us to give us an introduction. Thank you. Damien, would you like to give us a couple of words as an introduction, maybe?
Thank you very much, Nathalie, and good morning to everyone there. Obviously very disappointed not to be there personally with you today on multiple levels, but thrilled to still be able to have the conversation, and thank you so much all for making the time to join us today. Obviously, this is a critical moment in our fight against climate breakdown, and oftentimes we focus on the green aspect, but we have to remember the blue part of it as well. You know, as we're going to hear and we'll discuss, oceans really play a critical part of our lives and our livelihoods, and yet they are at risk given our actions and even more so our inaction. For us at Barclays, protecting and sustaining our oceans and the blue ocean economy is part of our commitment both to our, in relation to our Paris agreements and our goal to become net zero as a bank by 2050, including Scope 3 emissions. Ocean economy is not something necessarily new for us as an organization, but it's something that I think we are actively trying to look to do more. So in relation to that, we're very pleased to be able to suggest and to be selected to host this conversation with Building Bridges today. Outside of this, as Nathalie said, and we're really pleased to be able to invite Derek as well, our relationship with Monaco Ocean Week is one of our prouder sponsorships that has been recent since last year, in terms of helping to bring more visibility and hopefully more capital from our clients and others into this space. Additionally, the Blue Marine Foundation, Blue, is a charity that's dedicated to addressing issues of overfishing in MPAs, and really, again, that 30 by 30 goal for marine protected initiatives that we have been supporting for quite some time. So it is something that we see at an organizational level, both as a risk and an opportunity, but something very clearly that we all recognize more generally that we need to be doing more around. It is, however, for me, always one of the surprises is how little oftentimes we take this into account, or more recently, I think we've started to do that. And certainly I hope the conversation, I think we all hope the conversation today will bring that to life for many of you in the audience who are less familiar, but have made the time to join us today. And for those of you that are more familiar, hopefully a few insights in terms of how you work with us as wealth managers or private banks, as Nathalie have said. Not always the easiest, but I think sometimes very exciting and sort of very effective in terms of how the capital works. So with that, thank you very much again for your time and your consideration, and we'll hand back to Nathalie.
Thank you very much, Damien. I will now let Derek Kaiser, the Stockalper, who is the president of the Swiss branch for the foundation Prince Albert of Monaco II, give us a presentation on why the ocean economy matters and what it is exactly. Thank you very much.
Thank you, Nathalie.
Derek.
So, good morning, everyone. Thank you, Nathalie. Thank you, Damien, for the invitation. Thank you, Building Bridges, for this actually quite amazing and dynamic week. And thank you, Barclays, with whom we have a very strong relationship. I am going to speak about the ocean economy from a big picture, and I wanted to really drive actually the message that harmony will be actually what we need to achieve, and wanted to start with one question. Do you know what a brain your heart and the earth have in common? Well, it is water, because your brain has 70% of water, hearts have 70% of water, and our earth is covered by 70% of water. And it took 400 million years to achieve that. So, as you can see, maybe I have the presentation. There we go. Thank you. As you can see, 400 million years have driven symbiotic relationships between humans and the ocean. And I wanted really to drive other key information to you. 50% of oxygen is coming from the ocean. 50% of our protein intake is coming from the ocean. 50% of human population live within 80 kilometers of a coast. And more, we also see the ocean as a source of innovation. For example, new pharmaceutical companies are really looking at invertebrate animals to initiate innovation in pharmaceutical products. So what is really important is that actually ocean health is linked to human health. Some people are trying to put numbers on that ocean economy. $2.7 trillion is one, which would actually put the ocean economy between Brazil and at the 7th level of GDP size. That is also a challenge, because we're looking at the ocean as a source of value. But of course, we have also challenges, because we're extracting a lot of resources from oceans, and is driving some of the actually biggest challenges we have today, which is climate change. We have acidity challenges from the oceans. We have industrial waste. 50% of the ocean is now actually driven by plastic challenges. In 2050, we're going to have actually the same weight of plastic to the weight of fish. Illegal fishing is, of course, putting at risk, let's say, resources. And mineral resources might challenge our biodiversity. So what I would ask and maybe mention now is actually a very important presentation that J.F. Kennedy made in the 60s in Berlin, and said, don't ask what the ocean can do for you, but what you can do for the ocean. And this is where we're going today. And what is really interesting is actually the role of finance. What can it do? Well, I think we've realized that actually that one direction relationship between ocean and humanity is not sustainable. So more and more people are realizing that we need to work together in order to address that challenges. And finance could be a key enabling factor to do that. And of course, to address actually the ocean challenge, we need to bring together scientists, NGOs, local leaders, engineers, entrepreneurs, politicians, but also artists, because we need to build the narrative about actually the new ocean economy. So those new stakeholders can be brought together, public, private, financiers. It's really getting richer and richer, and it will make maybe our approach more agile to the solution. Second point is data. We need to know what is happening. We need to measure it. We heard it actually this week more and more. And this will enable then to provide traceability and transparency to behavior. New regulation, Green Deal are some examples of the rules of the game that might actually enable a lot of actors to allocate capital differently. And new financial tools. People are formalizing ecosystems, partners in financial instruments. And the Seychelles Blue Bond in 2018 is the first example of a simple public-private partnership to bring resources to protecting local fisheries and developing local economies. So what we need to do now is really develop a new game. So what we've tried to do at the foundation is develop two new tools, financial tools, that can bring the public and private actors together. The Med Fund was created in 2015, and it is actually a new mechanism, public-private, where you have countries like France, Tunisia, Morocco, and the foundation working together to protect local Mediterranean area. We do that by supporting, let's say, local equipment, by supporting evaluations, and by trying to find innovative solutions. Those funds are coming from the foundation and partners. So I would say this is the first approach. It was in 2015. In 2020, we developed another approach as a catalyst on ecosystem, which is public-private multilateral, which is the Global Fund for Coral Reefs. And the idea was to say oxygen is key to our survival, humans and oceans, so we need to protect corals. To do so, we can either take philanthropic money, or we can maybe develop new types of blended finance. So we brought together other foundations, the Paul Allen Foundation in the US, the Prince Albert II Monaco Foundation, then some countries like Germany, UK, France, and Canada, and then also some UN organizations like UNDP. And the idea was really to create a new fund, which started at $20 million, and we aim to raise up to $600 million to address on-the-ground challenges through grants, to really accelerate the incubation of solution locally, but also through equity investments to scale them up. And this is really something really, really new. The idea is also to drive profitability for impact. And I'm sure it is something we're going to discuss this morning. So my conclusion is optimism. We have the tools, we have the narratives, we have the energy to really drive solutions going forward. The first step is, of course, energy transition, using ocean-driven energy for our own needs to drive circularity. We're moving in that direction, we're not there, but look, there is a lot of drive and momentum in that direction. Second point is really managing our stocks of fish and linking it to local communities, because we don't want to industrialize it, to just extract this protein for our needs and leaving the ecosystem on the sideways. Third and fourth is really the new narrative of finance. It's really to say we need to leverage existing natural infrastructures to address CO2, proteins, and biodiversity challenges. Mangrove, corals are there to help us. We don't need to only do everything through technology. We should first start with existing infrastructures and build upon there. And the final point is natural capital. Is actually through digitalization sensors, we can monitor and evaluate values of some of those natural capital. And if we do so, we can also define trade-offs, meaning we can bring value to the oceans through financial leverage, as well as receiving value from the oceans. So I thank you very much for your attention, and I hope this provided some general setting, and I look forward to listening to the talk today. Thank you so much.
Thank you very much, Derek. Now we are going to move on to Jessica Smith, who works at the United Nations. She leads the nature workstream within the environmental program, which focuses on both ecosystems on Earth as well as in the oceans. So, Jessica, could you please give us some background on what frameworks are currently in place in order to help financial institutions navigate within this field?
Great. Thank you so much for the introduction, and thank you, Barclays, for inviting me to speak. I'm very grateful to the organizers to have this short notice dial in. I would love to be there in person, but unfortunately it wasn't possible at this time. As you mentioned, I lead the nature theme at the UNEP Finance Initiative. So we're a partnership between the United Nations and more than 400 private sector financial members, including banks, insurers, and investors. So we manage the principles for responsible banking, principles for sustainable insurance, and we work with the PRI, with the leaders amongst their 4,000 members. So we are very interested in the ocean, and we run a platform called the Sustainable Blue Economy Finance Initiative. We have a really active membership, including some of those on the panel and some of those in the room, who are really trying to bring a market lens on what good practice looks like in terms of sustainable lending and investment and underwriting. So we've developed a set of principles with market leaders in this space, and we have a growing membership platform, including 70 primarily private financial institutions with over 10 trillion total assets. So our members include entities like AXA, HSBC, Rabobank, BNP Paribas, Rockefeller Asset Management, Boston Common Asset Management, Morova, and Aviva Investors. So this is really a great platform to bring together some of the conservation leaders like WWF and the United Nations, World Resources Institute, and the market to really, develop guidance and tools that are helping the economy really understand how to operate in the ocean in a sustainable way, managing risk, and being able to take advantage of the upside opportunities that are there. So if we can go on to the next slide, I'm going to focus on our Turning the Tide guidance. And this guidance is aimed at financial decision makers across banking, investment, and insurance. And it's a science-based and actionable toolkit for investing in the ocean. We have selected, first of all, 5 key ocean sectors to focus on in the report. And the reason is because of their established connection with private finance. So this report looks at seafood, including fisheries and aquaculture, as well as their supply chains, ports, maritime transportation, marine renewable energy, including offshore wind, and coastal and marine tourism, including cruising. So these are quite large scale and well-established engines of the blue economy where financial activities are already taking place, however, not always sustainably. So this guide gives you some understanding of how to work in the blue economy in a more sustainable way. And we're looking to expand this guidance. In early 2022, we'll be releasing guidance on solid waste management, including plastics, and coastal defensive infrastructure, including nature-based solutions. So in a longer-term horizon, we'll also be looking at other sectors that are at a more emergent stage, like bioprospecting, blue carbon, and conservation finance. So the Turning the Tide guidance really highlights sustainable finance opportunities. It is about, how do we provide capital to companies or projects within the blue economy? And I wanted to highlight ports, the ports chapter. I think, many in the banking world are familiar with ports, and, there's a lot of understanding around, for example, containerization and supply chain issues. And this is, I would say, very hot topic right now with the supply chain issues that we've experienced in the recent months. So I just wanted to mention some examples of the upside opportunities that are covered in the guidance. So in terms of ports, there's quite a lot happening around digital application to improve complex port tasks like traffic management, allocating and measuring energy usage, piloting with harbors, docking, cargo verification, environmental compliance, storage, and inland transport. So technology is bringing us a lot of new opportunities in this space around artificial intelligence, autonomous vessels, blockchain, cybersecurity, digitization, and smart shipping. And all of these are areas that can offer spin-off benefits from resource efficiency to labor saving and risk reduction. Then also clean onshore power or cold ironing projects from solar energy and wind turbines can be spurred by local regulations to protect communities and lower operating costs for ports. And this is another strong area for innovation for technology and delivery. Another opportunity is around production and storage of alternative fuels, so hydrogen, ammonia, methanol, biofuels. These are all capital intensive, but essential parts of an emission reduction trajectory. As Damien mentioned, many of the banks in the room have signed net zero commitments, so we'll be looking for these kind of opportunities to bring their portfolios in line with those. Then furthermore, getting more technical, clean auxiliary power for different vessels. And then waste management is something that's been on the radar. And I think, we're all familiar with plastic waste and but there's quite a lot of waste around ports and shipyards, and increasing pressure for safe disposal of solid waste, ballast water, fuel residue, and chemicals. And there's a lot of recycling innovations that offer the ability to monetize some of this waste and create new revenue streams for ports. So I just highlighted ports because I thought that was a particularly interesting chapter of the guidance. But as I mentioned, there's also seafood, transportation, renewable energy, marine and coastal tourism. So I really encourage anyone who's interested in potentially, lending or investing in the space to look at the huge number of opportunities that are there and just, rapidly, exponentially increasing. Then if we can go on to the next slide here, I just want to mention my colleague, Dennis Fritsch, who leads our community of practice around the sustainable blue economy. And he's a great first port of contact. And the URL here has the detail of our guidance, and you can download the materials. I also wanted to just briefly mention on the risk side, we've also covered risk and exclusions, and we've published a separate exclusions list for the ocean. So I'm focusing more on the opportunities here, but I think from a risk perspective, there's some valuable guidance there as well. And as this guidance, the first round came out in March 2021, we've had a really positive response from the market, and we've had a rapid joining of members to this platform. And I think the more we exchange on events like this, the stronger we can align the market to the positive outcomes that we're looking for the ocean that Derek highlighted and Damien highlighted as well. So thank you. I'll leave it there, and I can pick up further on the guidance later. But I wanted to give you just a little preview and encourage you all to go and download it after this discussion today. Thank you.
Thank you very much, Jessica. So we have heard why the ocean economy matters, and we have also heard a couple of words on what is currently already in place in terms of measures and also in terms of initiatives. So I suggest that we now move to the panel conversation with leaders within this specific field. So let me please introduce you to the two other speakers that are going to join us today. So first of all, I have online, I believe, maybe we should put our guests on screen, please. So first of all, we have Sophie Gallois, who is the CEO for 10% for the Ocean, which is a philanthropic organization that is focused on raising funds and directing them towards causes that are critical for the ocean. Then we also have Fabian Houviller, who is the managing partner at Poseidon, which is an investment firm that is based on nature products. Just to give you a little bit of a background on Fabian. Fabian previously worked at Credit Suisse, where he used to be the global head of green solutions. We can now move on to the first question. So the first subject that we would like to cover is, we know that the ocean matters. We know that something has to be done about it. But at the end of the day, we would like to know how we can best go about this. So this is around understanding what banks actually need and what banks are looking for. So maybe in order to help us with this, Fabian, could you tell us a couple of words on what do private banks want and what are they looking for, please?
Thanks, Natalie. I think that is a super difficult question. And frankly, as someone who's been inside a private bank, a global bank for a long time, I think the honest answer would be it's impossible to tell. A private bank is almost like a conglomerate of sometimes conflicting internal interests among hundreds or thousands of people that try to kind of work towards a common goal, but all with, again, very individual and personal interests. And if I want to break that down, then frankly, I think at the highest level, there's probably a common denominator around getting products on the platform that are interesting for clients, that see some demand, that have assets under management, that make the product commercial from a distribution perspective, that have a solid track record, and that basically have an investment strategy that achieves the impact that ultimately the investors want to see. That all sounds quite nice at a very high level. I think if you break it down at what internally the interest is among different people, then you have to decide or differentiate between different different economic and I guess individual interests. There is the client relationship manager who is primarily interfaced to ultimately the client. If he is or she is a kind of a good person or executing the job properly, I think it's in the client relationship manager's interest to offer the best possible and tailored product to the ultimate client. If the client is interested in oceans, they have to find as many good products for that specific client to be offered. Internally, you may have different people working on the product side. There is people working on product structuring, and I think usually their ambition is to develop products that are innovative, that get an uptake in the market, and that basically deliver revenues to the company. There might be product development people or product platform people that basically have to look at the overall offering of a bank to clients. And when they come in, usually there's a competing interest among ocean products, with oil and gas products, with any other products, because ultimately there is limited resources and they have to decide what they can offer to the clients. So in the end, I think what really matters here is that if you want to work with a private bank, you need to understand that, again, there are competing interests within these organizations, and you need to address all of them in order to get ultimately to an offering of an ocean or any other related, I guess, impact-related product in the end. And frankly, that is where a lot of the challenges come in, that you try to address individual interests within the organization to the extent you can to get over that hurdle of basically getting the product approved.
Thank you very much, Fabian. So we heard a little bit about the difficulty, basically, on getting banks on board. So maybe, Jessica, this is your everyday job to get banks on board. You're dealing with many partners, as you mentioned during your presentation. So maybe could you give us a couple of words on how you go about it, and what can be done in order to get more traction in this topic?
Great, thank you very much. Yes, absolutely. So we tackle this through two strategies. The first is around portfolio alignment. And we are really working with all of our members to set targets, for example, for net zero, but also towards SDG 14 and 15 and the forthcoming post-2020 global biodiversity framework. So once our members have set those targets, there's a lot of effort to transition their portfolios to meet those targets. And then on the other side, we work with them on risk and disclosure. So UNEP-FI has been supporting the Task Force on Climate-Related Financial Disclosure and implementing that. And now we've been part of the group setting up the Task Force on Nature-Related Financial Disclosure. So those two strategies are, our main pillars of what we do. And some of you may have seen recently our commentary from the head of UNEP-FI, Eric Usher, characterizing, the relationship between voluntary and regulatory initiatives as sort of a dance of ratcheting up expectations. And so we feel that, we are part of this dance. We're trying to encourage leaders, and we really profile and promote, those members that are getting ahead and showing something new. And at the same time, we do work with governments and regulators on the policy side in terms of, bringing the lowest common denominator up as far as possible. We obviously see a lot of advancement in EU regulation, and we work with really members worldwide, and as a United Nations partnership, we are working with all governments of the world to try and make sure that there are regulations that promote the incentives and disincentives. Just on that end as well, we have quite an active effort in terms of trying to, bring blended finance tools in a way that private and public sector can really share risk. And I think there's been a lot of challenges identified with blended finance recently, but I think we're learning quite a lot in this space. And UNEP more generally has been working on model transactions in various spaces to really demonstrate to the market what's possible in a kind of front-running way, which we hope is inspiring. So those are some of the strategies that we use. And I think there's been a lot of interest in this area. We've seen a lot of success in terms of the growth of sustainable finance, but we also have a concern around greenwashing. So we're very much concerned with the data and the metrics, and making sure that these are really tangible efforts. And we also recently are co-hosting the impact management platform, to be part of the move to really strengthen, the identification of impacts and, convergence of standards around those as well.
Thank you very much, Jessica. Moving back to you, Fabian, could you please give us some examples on how you access private bank platforms and basically tell us what works and what doesn't work with that regard?
I think in the end, it really depends on where the ultimate client of a private bank is interested in and what the private bank wants to offer in terms of an asset class offering. So certain private banks are focused more on private markets, where other private banks are more interested in public market products. And I think what is important to understand is ocean investing is asset class agnostic. So while traditionally many of the investment opportunities have come from the private space, there is more and more opportunities in the public space as well. And one shouldn't disregard them. So I think in terms of access, again, usually it is simpler to offer private market products, and there is a flurry of private market funds, primarily the private equity space, but also looking at private debt that have been coming to market over the last few years. Very often they're broad-based, looking at the number of industries, the ones that Jessica alluded to. Sometimes they're focused on one thematic sub-theme, like fisheries and investments in sustainable transition of fisheries. Or plastics, where there has recently been more and more investment opportunities or investment funds coming to market. But then looking at the more public side, which again, most of you who are in the finance world will understand, is where most of the investments of an average investor go into. There is opportunities on the fixed income side, the blue bonds. The example was mentioned by the Seychelles, which was an early one, a very complicated one, a very small one. But over the last 2 years, there have been probably around 110 blue bonds that have come to market. And so, which frankly even allows for a broad-based portfolio approach if you're interested as an investor to do that. So there's quite a bit of opportunities there, looking at low carbon transport, to pure play sustainable fisheries companies, to basically project-based bonds looking at plastics recycling. And then on the equity side, there's a number of again, pure play companies in the broader blue economy space. But also more and more what we see is large corporates looking at changing their entire value chain and adapting their business model to the new realities of resource efficiency and the lack of it within their supply chain. And so there is a number of broad-based, 3 specifically today, broad-based equities funds investing into the oceans. There's a 4th one coming to the market fairly soon. And I think in the end, the answer would be, it really depends, I guess, on the private bank's interest. It depends on also the people who are running these platforms, to what extent they're open. Traditionally, again, easier to do that on the private market side, but there's more and more openness to look at public markets products. I think internally what helps in order to get access is if you have a cornerstone investor funding the product in the first place, which is always an important consideration for any bank to launch a product. And then secondly, I think you want to have internal sponsors within a private bank on the distribution side who are comfortable talking about that product, offering to their clients, and also seeing some reasonable demands that would make the product economical for the bank.
Thank you very much, Fabian. So now, taking a step back, I would like to hand over to Sophie. Sophie, welcome again on the panel. You are in charge of philanthropic investments. So this is not exactly linked to the banking industry, but we would like to hear your thoughts on why the ocean economy matters to you and what does it mean for you.
Thank you, Susanna. And again, I'm really pleased to be here, although I'm really sorry it's from my home in London. So I'm the CEO of 10% for the Ocean, which is a charity whose one focused goal is to shift the level of funding for the ocean. You've understood that the ocean is 71% of the planet's surface, and it's massive in many respects. In terms of global philanthropic giving, it represents 0.6% of global philanthropic giving, which obviously is not very much. So, and I think that I think the one thing that struck me, because I came to this position, I hadn't worked on the ocean before, and looking at the stats and funding all the time, what keeps striking me is that it's a giant blind spot. It really is. It's for policymakers, for investors, it's a giant blind spot, not just because there are problems with the ocean health itself, which are a problem for us because the ocean is our life support system, but also because the ocean has nearly infinite potential for solutions, in particular, talking about climate change. So it's not a problem, it's also the source of many solutions. But, it's a giant blind spot. It's easy, according to the United Nations Joint SDG fund, it is the least funded of all the SDGs. And in fact, many countries, such as, the US, France, and so on, most of their national territory is water, but that's not front of mind. Now, clearly, that's not the case in Switzerland, but that's the case for many other countries. So the way we approach this in our organization is dual. And the first one is to try and make it simple, because a lot of projects, whether they're philanthropy actually or private, and you were talking about 110 blue bonds recently, it's a very fragmented ecosystem. Obviously, it's very vast. There's lots of verticals here. So it can be quite daunting for somebody coming at it afresh, be it an investor or a philanthropic donor. So we're trying to be a single gateway so we don't have projects ourselves. We kind of try to raise funds, and then we have 50 ocean recovery partners, which are, very big charities or small frontline organizations we've identified with due diligence, and we channel the funds to them. But the second initiative I'd like to brush on very quickly is that we're working with the UN Joint SDG Fund to establish a finance partnership, which would, under one framework, allow us to have private capital and philanthropic capital. Philanthropic capital would help with the seed funding, and then, with projects that could then become investable proposition for investors to develop further. And I think maybe that's something we can discuss a bit, because I think the ocean is, for me, it's a little bit like space, in the sense that, a lot of the projects are very early stage, and therefore there's a need for seed funding to get them off the ground and make them into investable proposition. So that's why philanthropy, I think, needs to work together with private capital in a coordinated way as much as possible.
Thank you very much, Sophie. I think that we all tend to agree that there is a need for financial players to be involved and to actually take further steps in order to help fund the ocean economy and fund projects that are behind it. I would like now to spend some time discussing why, in particular, private banks should really be interested in this topic and should help drive more funds within this specific theme. So, in order to progress with our conversation, I would like now to hand over to Jessica again, and please, could you explain to us what is, in your view, the business case for private banks to showcase the ocean economy to clients? And basically, why should private banks do a little bit more within this space?
Great, absolutely. Well, I think when private banks are interacting with their clients, I think, there's already a degree of traction. At least 66% of global companies already depend on ocean resources. So it's often not a stretch to introduce this topic. And then for their investors, regarding the upside, there's such a long list of great products that have recently been launched in this space and have been really well received in the market. So I think Sophie mentioned 110 blue bonds recently, but there's been some other great products put out just over the last year, including the Global Fund for Coral Reefs that Derek was mentioning. The Bank of China released a blue bond. AXA and the Nature Conservancy released a blue carbon and resilience credit. So I think that's all very exciting. All of these upside opportunities really help to meet net zero and nature positive commitments. And, there are certainly increasingly incentives from the public sector to invest in nature-based solutions. Some of you may have seen the recent WWF report that said that 92% of countries nationally determined contributions include nature-based solutions. So there's quite a lot of interest from countries to move into this space as well. So, as I mentioned, some of the challenges around sustainable investment in the ocean can be addressed through blended finance arrangements that can help reduce project risk and increase the scale to make these more investable opportunities. So in terms of the business case, I think there's certainly, on the positive, there's definitely upside opportunities. And, as Sophie mentioned, there's a giant blind spot around the ocean, and therefore, in a way, that giant blind spot also lends itself to infinite potential, and just the way that space is as well. This is the space opportunity on our own planet is the ocean and all the exciting opportunities. Damien also mentioned the 30 by 30 target for marine protected areas, and that also opens up a lot of new opportunities in the positive space. I know we're focusing on the banking sector, but I think there's more to be said also around insurance and the opportunities around parametric insurance, for example, for coral reefs. So I just think the potential for innovation and new product lines in this space is absolutely exponential. Now, on the risk side, there's certainly risks in terms of staying with the non-sustainable ocean economy, and moving towards a sustainable economy will help avoid reputational damage, default, reduce returns to investment in the long run, and challenges with compliance. So, by looking at the guidance and considering what are sustainable blue economy lending and investment opportunities, that's really ensuring that what you are lending or investing to has viability and profitability. And since private banks really excel at pricing, risk, and return, I think these equations are increasingly clear, and the calculations will be, more clear over time for this big opportunity.
Thank you very much, Jessica. Now moving to Damien. Damien, please, could you tell us why you think this is a topic that should typically catch clients' attention?
Absolutely. I think what I've alluded to really comes down to two different factors. One is the portfolio factor, as we've been talking about, both in terms of risks and opportunities, and as we get more into some of the detail that Fabian has highlighted around different asset classes. So fundamentally, for us as investors or advising our clients on sort of where there are opportunities for portfolios or considerations that they can do account, making sure that we are considering the widest set of issues that we can. And that is important for us in terms of both protecting value in portfolios, but also generating value. And again, depending upon where clients sit and on an asset class or risk basis, there are multiple options that I think we are seeing coming to the fore, but more that do clearly need to be developed, and also innovations, back to the point around blended finance. So I think it's a really interesting space for private banks and others to be able to put private capital into. I think private capital holders often have an interesting space to play in terms of not being institutional nor being retail. Oftentimes a lot more flexibility in terms of what their capital allows them to do, and a lot more of an ability to drive it into areas that are of personal interest. And that gets to the second point. It is hard to imagine anyone who has not at some point been to the beach or been connected to the oceans on some level. And therefore, for those who are thinking about the natural environment, and certainly as we see some of the more physical effects of climate change start to emerge, throughout the whole water system, but certainly from an ocean perspective, be it acidification, loss of coral reefs, higher degrees of extreme weather, I think people can make a personal connection to the implications that not addressing the oceans comes into. And therefore, the aspect of being able, as Fabian said, sort of the ideas of what is stirring to clients, right? What actually moves them and interests them. It's hard to imagine a sort of a simpler or a better starting point for something that we are all often connected to or have a relationship with on some level. So overall, I think it's both of those factors in terms of both for us as organizations to say this is something that matters to us or should matter to us on a financial basis, but we could certainly imagine that this should matter to you or would matter to you naturally on a personal basis as well.
Thank you very much, Damon. Fabian, from your perspective, if a bank decides not to be invested in this specific sector, in this specific economy, what would the bank be missing out on?
I think they're missing out on a number of levels. So maybe just quickly going back to Damien's comment to kind of put things into perspective or a practical example. At my former employer in 2018, we kind of felt there was interest among clients in the topic of the ocean economy and investing in it. So we put together an event for the wealthiest clients in Europe, and we brought them to Lisbon for a day to learn about the topic. And frankly, we were preoccupied about the interest and whether people would actually take up that offer to listen to ocean practitioners and finance experts that would give presentations throughout the day. How that usually works within a private bank is you ask the different markets to submit interested clients to that specific event. From initially $200 million of net worth that the clients had with the bank, we had to raise the bar to $1 billion. So there was so much interest that we could only take in billionaires to attend the client event. So we had 20 of them coming out to Lisbon. We spent a day with them. We presented a number of different, I guess, scientific inputs as well as investment inputs. After the event, when we came back, there was a number of emails from clients saying it made them really proud to be a client of that bank, specifically around that event, and it made them proud to be a part of a network of clients that basically share that common vision of the oceans. And so going back to, I guess, to the point about why it makes sense for a private bank is, this is a really competitive market where banks, they all look the same. They all offer very similar products. They all have very similar pricing structures. So if you want to differentiate, the only thing that you can really offer is that, what Damien referred to, that connection to an issue that really matters to clients, and also offering them, I guess, a network of like-minded investors, clients, interested parties that share that common vision. So I think if you're not doing it, you're just missing out on an opportunity to achieve basically what many call client proximity or client retention. So a way of keeping clients happy that otherwise just go to a competitor who kind of realizes that first. I think you're also missing out to be a very good steward of your client's capital, frankly. Seeing the interest, and again, we work with a number of private banks in Europe, seeing the interest among some of their wealthiest clients in the topic, and seeing the disconnect between what the clients want and what the relationship managers actually get, it's still huge. And frankly, what that means, at one point, these clients will just leave and they will look for a safer harbor or basically a provider of capital that is really interested in what the client's demand is.
Thank you very much, Fabian. So let's move on to the third section of our panel discussion, and let's talk about how we can actually invest. So let's move into the practical aspect of things. So I need to specify that here we are not giving financial advice. We are not giving financial advice as Barclays, and the panel is not giving financial advice either. We're simply talking about available options. So Fabian, unfortunately, it is back to you again. So could you please tell us what are concretely the available options in order to invest in the ocean economy?
Sure. I mean, that's a topic we look at on a daily basis. So usually investors look at an asset class framework. To start with, and that is probably the most challenging one, is there isn't, to my knowledge, any available cash-like product available in the market today. So any cash alternative that has a positive ocean impact. The closest that you probably can get to is certificates of deposit, generally investing into green issues. This is, again, if you want to basically put your cash into a position where it's super safe, but still generate some impact. It's not inconceivable that pure play ocean-focused companies would issue certificates of deposit in the future that are aligned with an ocean positive impact of some sort. But then moving on the public market side, as we've alluded to, there's equities. Basically, there's small, mid, and large cap opportunities, either on a direct basis. It can be anything from a pure play sustainable salmon company out of Norway to a basically plastic recycling company in France, to basically a major transport company that is looking at their entire supply chain, looking at low carbon vessels, looking at hydrogen fueled transport, looking at some of the things that Jessica alluded to around making transport more efficient through digital twinning. So there's a number of opportunities, again, on the equity side, both direct investments and then at a fund level, again, without mentioning names, there's probably 3 broad-based funds out there in the market right now available to both institutional and retail investors in some cases, but also then looking more at thematic funds around fisheries, around plastics, around transport. On the fixed income side, again, the same thing. To the extent you can get access through your bank to the primaries, there is a number of blue bonds in the market, some of them pure play, some of them with a significant percentage of use of proceeds going to ocean issues. That could be 20, 30, 60%, because often these green or blue bonds, they go to different purposes, not only to the oceans. There is, to my knowledge, again, no broad-based fund opportunity around blue bonds at this stage, but there's definitely a number of green bond funds that, again, have a certain percentage allocated to blue bonds as well. And probably that is it on kind of the public market side. There is more and more ETFs coming to market as well, looking at creating benchmarks that can be invested into both multi-asset class, looking at equities and fixed income, or then just one or the other. And then on the private market side, again, I mean, usually private markets requires bigger investment tickets for investors. There's opportunities on the private equity side through a number of funds. Last year, we've seen probably 10 new funds coming to market with broad-based strategies, again, with thematic strategies, regional strategies. There's kind of, I think, earlier risk capital type structures like the Global Fund for Coral Reefs, and then there's very commercial structures. So, for example, there's one fund which has raised more than 350 million, only looking at sustainable aquaculture in terms of an infrastructure play, investing in huge sustainable, sustainable aquaculture ponds and infrastructure in emerging markets, basically providing sustainable fish to off-takers globally. And then finally, there's commodities. Again, if you have some capital available, you can invest directly into sustainable commodities coming out of the oceans, whether it's fish or more recently, which is a very nascent field, blue carbon as a specific commodity, where there's a number of projects looking for direct investments that you can basically can you find your opportunity. So there's no dearth of investment opportunities if you know where to find it, and basically if you have, in some cases, a minimum available capital to place into these products.
Thank you, Fabian. So we have heard that basically, should one be interested to invest in the blue economy, there are plenty of opportunities across different asset classes. Moving to Damien. Damien, from your experience and from your knowledge within this field, could you please share with us your view with regards to which of these investments could be most interesting for clients from a thematic perspective?
Absolutely. So, and it is a really interesting way to look at it. I mean, if you bundle it together, the stat that's often used is that, the ocean would be the 7th largest global economy. If you took it in its totality, which demonstrates, again, an interesting, to Sophie's point, an interesting gap in our understanding or visibility around it. But then you break it apart. I think in some ways the Time and the Turd report that Jessica was mentioning provides a great framework to get people interested in some of the areas. But we've also looked at that as well in terms of a few different sectors in and of itself. So very clearly, energy, foremost and often more established, offshore wind energy, very clearly there. But we're actually seeing more interesting areas emerge around tidal and wave energy as something that also avoids some of the intermittence issues that are coming up. Everything from companies that are providing wave power imports, sort of a double angle there, to those that are moving into the commercialization phase around different types of tidal aspects. Fishing, as Fabian has alluded to, in terms of the aquaculture nature of how commercial fishing needs to be part of an ocean-related income stream for many, both developing and developed worlds. But very clearly, something that we need to be managing more carefully and thinking about what are the options, but also oftentimes the underlying technologies. Apologies, I can't remember who alluded to it, but some of the data aspects around these things, both in terms of protecting risk around illegal fishing, as well as the aspect of what we'll end up thinking about on a supply chain basis for the quality. And linked to that is the aquaculture side of things. And obviously that is very fraught, I think, in some ways for some of the unintended consequences that we've seen be generated from aquaculture. As we try to push things forward, we seem to be generating more problems, around pollution, or the next stage around sort of use or even feedstocks, in terms of how those things are working. But again, I think this is where innovation tends to bring us to the next stage. I think about the alternative protein space that now all of a sudden is becoming a feedstock, oftentimes for the ocean economy, and thinking about the connection there, which I'll actually come back to. Shipping very clearly, and obviously we've seen the issues around supply chain, as a result of the pandemic, but even more importantly, sort of the role that shipping plays in terms of a global economy, and thinking about how to bring that to net zero. And obviously some recent announcements around net zero corridors for shipping coming to life. And then underneath that, both on an energy efficiency basis or potentially on a new technology for an energy basis, some very interesting things as such. And lastly, plastics. We come back to that. We keep on relating things back to the aspect of this. And I think so much has been talked about around plastics, but I think that highlights a really interesting aspect, which is we often think about ocean economy as unitary, but actually it's the interplay oftentimes between what happens on land and what happens in the oceans. And thinking about the ocean as a thematic sector can sometimes be as important to think about the upstream, if you will, activities and aspects of what we do around this space relative to what we're actually thinking about doing in terms of the oceans themselves. And that's just a short list, right? Underneath that, obviously, there's a full range of interesting opportunities. Things are around everything from even more tangible. We've seen something recently as a electric tender for yachts and for local boating, to back to the points around energy. And sort of across that full range of spectrum of opportunities. I think that's where it becomes really interesting, again, to connect where people are personally interested, but also where oftentimes the capital has not been as active or visible in terms of finding or driving commerciality, and therefore, for an alpha generation perspective, opportunities for clients.
Thank you very much, Damien. So we have heard from Fabian some of the available options. We have heard from Damien some of the themes that, from our perspective, could be most interesting for clients. What we would like to hear now from you, Sophie, is for you. You try to raise funds in order to lead these funds towards projects that are linked to the blue economy. So for you, in order to convince people to give you those funds, what are the themes that you tend to put forward in order to help them get there?
Thank you. That's a great question. What I'd like to answer, just 2 points. And firstly, very often, I don't lead with the ocean, because the ocean, as I see, is a blind spot, as I said, and that means that for many corporates, for example, or many clients, SDG 14 is not actually in their ESG strategy. I think if you analyze the ESG strategy horizontally across a number of organizations, you'll see SDG 14 is has very little representation, and so therefore it's easy for people to push back. Whilst if you go at it for an angle such as climate change, health, nutrition, energy, then you will be able to connect better and then bring in the ocean afterwards. You tell people, do something on the ocean. They're like, well, actually, it's not in my plan. We're doing climate change and biodiversity, or we're looking at, safe energy. And so, it's interesting to go at it for another way, not necessarily lead with the ocean, in my experience, firstly. And secondly, I think it's a highly entrepreneurial field. And I think that should be exciting to a lot of investors. There's a lot of innovation, a lot of entrepreneurial, opportunities here. That's why it's very fragmented, a lot of new initiatives. And for people who have an appetite for that, I think it's a fantastic sector. There was a book that some of you may remember called The Blue Ocean Strategy a while back, published by two INSEAD teacher. That was about capturing unexplored new market areas. And I think that's exactly what the ocean is. So when I try and convince people, I try to go in through an angle they're interested in and then follow up with the ocean, firstly. And secondly, I try and say, look, if you're looking for a field that's as entrepreneurial and innovative as possible and has nearly infinite potential, yes, there is space, but there is the ocean. And it's a fantastic space. And I think it's really a good idea to try and link with philanthropic capital or with public money. And there's been a lot of talk about blended finance here, which I think is also important to help reduce the risk level.
Thank you very much, Sophie. Thank you very much to all our panel members for this very insightful and interesting conversation. We can now move on to the audience for questions.
Thank you. I'd like to speak about the oil and gas sector, actually. I mean, between the oil spills and various disturbances, we've been speaking recently about seismic surveys, for example, in South Africa. And do you think that investors who care about the ocean should exclude oil and gas companies from their portfolios?
Maybe, Damien, would you like to take this answer? Damien or Fabian?
Yeah. So it's a really interesting and a challenging question, and one that I think has a lot of nuance to it. We support some research actually with families, family offices, foundations. Surveyed about 300 of them, average net worth $833 million. And we asked that question, sort of, what's your view on exclusion versus continued investment? And interestingly, it was 53% said no, we wouldn't see them as investable, and 47% said yes. But actually, the underlying reasons, I think, are what becomes very important around that. The no's, most of them very clearly on an ethical basis, to your point, we're saying, the damage that they cause is not something that we as a family, again, back to the personal aspect of these things, that we want to be involved in. I think it was about 72%. The next factor was actually risk. So from a stranded asset or a regulatory and actually legal risk perspective, you see that aspect coming in. The other side of it, people broadly saw them as potentially moving to renewables, obviously not your question here, but also in terms of the ability to influence them. And I think that's where the debate, certainly for institutional investors, has come down. Holding systemic risks in their portfolios and needing to hold some of these companies means that they will continue to do so, but they will hope to influence them through shareholder engagement and stakeholder engagement to drive changes. So I don't think there's a very clear answer, unfortunately. I think, for us, as a firm, interestingly, we have strategies that don't hold them from an ethical exclusion perspective, and even in our traditional strategies, the portfolio managers are not interested in them both on a cash flow and on a risk basis. But I think the underlying question that you point to, or for me, is actually one that is more the externalities that they generate or that we are generating, and whether or not those are ever really priced in to what it is that we're doing. And I think that is where our biggest risk is. It's not about the capital that does or doesn't invest. There's arguments that say, simply by selling your shares does not necessarily drive change. Actually, at COP26, one of the CEOs of a leading asset manager talked about these going to private hands, which actually may have more of a risk. So I don't think the capital question is an easy one, and I think it's almost on the approach that you're taking, an ethical one, a responsible one, or an impact one that drives that decision for you as an investor. I think the more important thing that we need to drive out is the accountability and the visibility and the transparency around the externalities, and making sure that those are costed in to that.
Thank you very much, Damien. Jessica, yes?
Great. Thanks. I'm happy to jump in on this question as well. This is obviously something that we are very concerned about as UNIPFI and part of the Sustainable Blue Economy Finance Initiative. So as I mentioned, the initiative has produced guidance, which is about sustainable blue economy, and it's very much trying to implement the principles that I showed on the screen earlier. However, we're also aware that we're in a transition phase towards net zero, and there will be legacy activities, or there will be sort of unsustainable activities that continue to take place in the ocean, in the foreseeable future. Sometimes these are aligned with nationally determined contributions or net zero strategies, but they will continue to exist. So we are actively working on this with the partners that I showed on the screen earlier, and we're not producing guidance, but we're going to produce a paper around transition to sustainable blue economy. So in that paper, we're going to touch on offshore oil and gas, deep sea mining, dredging, sand mining, and other activities. And effectively, we're going to produce sort of a table similar to what we have for the sustainable sectors, and really give guidance on what's the science behind avoid, limit, caution, proceed in these transition activities, and point to the latest science for those. Similarly, we will produce another recommended exclusions list. So you may be able to guess, but obviously the process continues with scientists and market players and NGOs in discussion right now. But we do hope to produce this discussion paper and the recommended exclusions list, I think Q2 next year. So we hope that that's part of the discussion around these topics and the transition that we're in right now.
Thank you very much, Jessica. Would we have another question in the room? Yes.
Hi, Michael Adams, Ocean Assets Institute. We're a Swiss-based ocean finance advisory group. We actually wrote the chapters on shipping and ports that Jessica pointed out. And so the guidance is terrific that's come out of that process and is ongoing. And so I just wanted to encourage everybody to look at that. And also I wanted to point out two things. Here we are in Geneva. This is a major maritime power right here. And Switzerland is as a whole. We have the 5th largest fleet in Europe, believe it or not, because of all the trading companies and shipping companies that are headquartered here. So you can have a lot of influence just by being aware of what's happening particularly on the decarbonization trajectory, which in Glasgow, where I was a couple weeks ago, was one of the bright spots of Glasgow that maybe you didn't hear about, but a lot of progress was made on shipping decarbonization among some very powerful countries. The other thing I wanted to point out is that the product flow that Fabian talked about and covered well has been increasing lately, and we were part of the Blue Invest Europe platform, creating that for the European Commission. Right now, we're doing the same thing for Asia, which dominates really almost all of the maritime sectors. And Asian Development Bank is our backer with a $5 billion pledge of catalytic capital towards all the ocean industries. So that's going to be de-risking a lot of the things we're talking about here. And the other two sponsors of this project that we're leading is UNEP and UNDP. So, kind of a major Swiss role here on bringing product from the Asian blue economy into European capital markets with $5 billion of catalytic funding behind us with ADB. So stay tuned. That's going to be called Blue Invest Asia. The Europeans don't mind that we're stealing the name from them and the model. And it's going to be quite exciting in private markets. But generally on public markets, the guidance that UNEP FI is now hosting is really terrific on looking at listed equity and debt issues as well. So lots of things happening here in Switzerland that you could be a part of. And for Geneva-based people, you could join the Propeller Club, which is the network of all the maritime players here. So thanks, Barclays, for hosting this.
Thank you very much. So we heard quite a lot about what is being done, why the ocean economy is important. But I would like to ask a question to our panel members, and it is the following. We spoke about what the financial industry should do, which is, I believe that the financial industry has a big role to play in this. But from your perspective, if we take a step back, what is the role that should governments play in order to enforce tighter regulations, in order to help maybe some of the movements towards cleaner oceans, etc.? Sophie, could we maybe have your point of view on this?
Thank you. Yes, the governments have, in terms of policy, I think there's a lot of work to be done. And I don't even know where to start. Your question is so big, and I'm sure, Jessica will be able to. But whether to contribute to that more. But you're talking about subsidies to, for fuel to the sailing industry. That's an issue. Talking about the regulation of marine protected area. I think most people wouldn't think that marine protected area, you can actually fish, you can in some cases do bottom trawling. It's regulating. I mean, the fishing industry is going to be an issue. There's an article in Nature that was published about 6 months ago, I think, that estimated that the carbon footprint of bottom trawling fishing is equivalent to the entire global aviation industry. So again, it's mind, you don't think about the ocean and everybody's focused on airplanes. And meanwhile, these fishing fleets are dragging the floor and releasing the CO2 that's stored there massively. So, but I think for me, the thing that will make the most impact is to find some governance for the 80% or more of the ocean space that is beyond national jurisdiction. Because that means that, in terms of everything, energy, mining, blue carbon, it's very difficult to have an initiative in an area that is not governed. And so I think governance for that, for the ocean, which is, outside of the boundaries, is probably the number one thing I would like to see move forward. I hope that answers your question.
Absolutely. I can see Jessica is nodding, so maybe Jessica would like to add a couple of words.
Sure. Yes, I think similar to Sophie, I see absolutely a huge role for government in this space, and governments really set the playing field for private markets to operate, and it's really their role to lead in terms of aligning the incentives and disincentives and the rules of the game towards society's goals and expectations. I similarly saw the study that in Nature that Sophie mentioned, and this point about bottom trawling being more of an emitter than aviation. It blows our mind in terms of what a blind spot the ocean is, and where our attention has been, and then the huge potential of the ocean for carbon sequestration. There's so much unknown about the deep sea. So actually, my first ask to governments would be to invest a lot more in the science and making sure that when we're setting these targets, we're all trying to navigate towards a 1.5 degree future, that we have the best science in hand and we really understand what we're working with. There's been great studies recently on the roles of mangroves and seagrass and other blue forests, and these are really assets that we don't understand. So I think investment in the science is what's going to get us the furthest in terms of knowing what are the cards that we're holding to reach this 1.5 degree future, and to continue our life on Earth as we hope it will.
And if I can just add one more thing to bring it back again to the financial side of things, I think for those of us who are in the capital market space and as investors, thinking about these as inevitable policy risks, even if they don't exist today, I think is one of the things that we are thinking as you look further out, in terms of what are the implications as these things come in and governments recognize the role that they have to play in putting the regulations in place. And I would expect, and certainly I guess I maybe more accurately hope, that as we move from the TCFD to now, as we talked about, TNFD, the sort of the Task Force on Nature-related Financial Disclosures, that as those disclosures become both established and then data starts to come out, that is where governments and others and investors will be able to think more holistically and actually more specifically about this space, to take action as both investors and as governments as we move forward.
Thank you very much, Damien. Yes, please.
Thank you. My name is Chris. I'm an independent ESG consultant. And I'm fascinated to hear the conversation, and I'm also very passionate about the ocean, and I think the more you become passionate about it, the more I can find arguments why we need to invest in the ocean and why it is underserved at the moment. But yesterday I was at a session about biodiversity, and they were saying, well, this is actually the angle we have to finance, and in a way there is a lot of kind of competing interest in that. And I wonder if you are a bank as Barclays, who has like a broad portfolio of products you want to serve, or you are a UNEP and there's also different angles you want to serve. How do we convince investors that ocean is the one thing that they need to invest in, or how do you rate where to prioritize your action or motivate your investors to invest in to maximize ESG impact?
Can I take that one? So let me answer it by referring to a really interesting but very complicated study by the University of Bath, which was done probably 2 years ago, looking at the SDGs overall, the 17 SDGs. What is really interesting is, as I think Sophie alluded to, is SDG 14 is arguably the most underfunded SDG of all of them, excluding SDG 17, which is the partnership SDG, another proper one, which is totally counterintuitive because nature, really, and nature's efforts provide the physical constraint to a healthy and sustainable and inclusive economy. So what the study did is they looked at the network effects between the 17 different SDGs. And what they've come up with is a number of really interesting findings. So basically, if you drill it down to all the individual efforts and interlinkages between them, there's 3 SDGs that really matter and that kind of provide the backbone of everything else. It's SDG 14, SDG 15, life on land, and SDG, I think, 6, gender diversity. So the 3 together, again, kind of provide the backbone. So what they found is if we don't address SDG 14, then that means it's probably the least, the last SDG that kind of gets to achievement or kind of gets to progress that we want to require. If we make these network effects between the different SDGs stronger, it's one of the last 3 that is achieved. On the other side, what they also have found out is that looking at all the different SDGs and how they interlink, 40% of all the other interlinkages depend on SDG 14 being achieved. So it is the SDG which is most important for all the other SDGs to basically come to full fruition. And I think if that doesn't give us, and again, it's one study, there's a number of different studies looking at SDG network effects. So what that tells us is we're at the point now where investing into SDG 14 will have a lot of knock-on effects on the other SDGs that we also want to achieve, which is much more significant for 14 than it is for any other SDG. Very complicated, long answer, but again, I recommend you look it up. It's the University of Bath, I think a paper of 2020, looking at mathematical network analysis.
Thank you very much, Fabian. I would like now to move to the panel again, to hear the final thoughts after Q&A session, after the panel discussion, on how do they think that private banks and wealth managers what can they do in addition to what is being done to help drive funds into the blue economy. So maybe to start with you, Sophie, what would be your closing thoughts on this topic?
I think, and we've already heard quite a bit about this, but I think it's time for innovative financial solutions. It's not a domain like any other. The urgency and the scope of what we need to invent, achieve, and progress around the ocean and SDG 14 is so big. I think it's time, and this is Geneva, this is a big financial center, to find innovative solutions so that you can blend public money and private money, but also philanthropic money and private money, and really try and invest in a way that's going to be more powerfully efficient to really boost that innovation and entrepreneurship. So that's what I would suggest would be my closing thought: financial innovation to really accelerate what needs to be achieved within the ocean.
Thank you very much, Sophie. Moving to you, Jessica, what would be your final, your conclusion thoughts, please?
Thanks very much. And I hope you'll just forgive me shamelessly promoting some of our initiatives, but we really do think that they're great platforms. And as I mentioned earlier, there's some co-authors and contributors, including Fabian, who's very modest as well on the panel, to the Sustainable Blue Economy Finance Initiative and our guidance. So I would really say a great starting point is to take a look at the Turning the Tide guidance. Join the platform to network with your peers and exchange with the scientific community and other market players. Take a look at some of the exclusions and consider if your financial institution is involved in any of those activities. I think coming down the pipeline, the Task Force on Nature-related Financial Disclosures is going to publish a beta framework shortly, and we'll start piloting the TNFD in marine sectors in the coming year. So that's something to practically get involved in. And early next year, we have a webinar with PRI, the Finance for Biodiversity Pledge, and the EU Business and Biodiversity Platform on green shoots for nature finance. And just with the previous question, I don't see a competition between biodiversity and ocean finance. We see them very much hand in hand. So that webinar will show some great innovations that are coming up and that are in the pipeline. So we hope that we can get the year 2022 off to a positive start. So we welcome you to join that as well. Again, please forgive me for the shameless promotions, but we do hope it's of interest.
Thank you very much, Jessica. Yes, we forgive you. Nothing to worry about there. Moving to Damien, would you like maybe to share your thoughts?
One of the things I think we've touched on it before, and as the member of the audience said, I think making this personal to ourselves and to our clients is actually hugely motivating. I'm Greek by heritage, or half Greek by heritage, and again, you have that connection. I race offshore, or in terms of sailing. There's nothing that helps us to think or be passionate about a topic and be able to spend and dedicate time and effort to it without that personal connection. And as I alluded to before, I think there are very few people who do not have, or certainly our clients who do not have some connection. And helping them to see that and make that connection both and internally, as well as Fabian alluded to earlier, the sort of the dynamics internal to private banks, making that clear to those individuals you're trying to engage and motivate, I think can be a really powerful force to be able to drive this in a long-term basis.
Thank you very much, Damien. Fabian, would you like to add a few final words?
Yeah. Listen, I think what we all know is oceans are the domain of complexity. We probably will never fully understand how they function. And frankly, I don't think that is required, because we know what kind of directional steps we need to take in order to make them more resilient and healthier. And so from the perspective of a private bank, don't use the excuse that we don't have 100% of an understanding whether the final result leads to actually the output that we want to achieve. But be courageous and try to find opportunities that you can offer to your clients that help them and the oceans basically get to that journey of positive impact. I think be inquisitive, try to better understand what is at stake and what you can do. Again, not using the excuse that we don't have the full answers to all of that. And frankly, I think also maybe just be honest that you don't know all the answers and that you're willing to collaborate and partner with parties out there that know a lot more than a private bank does around a topic like oceans.
Thank you very much, Fabian. Thank you, everyone, for joining us today on behalf of Barclays. Also, I hope that you found this conference interesting and that you have learned what the ocean economy is, and that this is also going to motivate you to talk about this to your clients, to also help your organizations, if you're working within the financial industry, to make a step to be interested and to talk about this subject to your clients. Again, on the behalf of Barclays, thank you very much for your attendance, and thank you for those of you that joined us online.